It's perfectly possible to build a multi-million pound business working 30 hours or less. In this video, I'll be giving you the exact formula that I use and you can use to build that multi-million pound business worth millions in enterprise value while working 30 hours or less per week. My average working time is about 25 hours, and you can do the same if you use the right systems and build the right mental framework that you need to do to build such a business and have a great lifestyle with it. Before I get into the details of how to build that multi-million pound business working less hours than people work in a typical week, it's important to understand that if you want to build a business which has a large enterprise value, meaning the business has actual value on the marketplace if you were to exit it, then it's absolutely essential that you do close to 0 hours of work in your business at all. So you need to be completely exited out of the day-to-day at the very least. But the more you can be exited from the entire business, the higher your valuation will get. So let's get into the details now. So before we get into this, it's important to understand that there are two types of business owners that exist in the marketplace. The first type of business owner is the one who is on a mission to change the world or the industry. And what do I mean? Or have a massive contribution. And what do I mean by changing the world? It could be the country or the local area. They're on a mission which is going to have a huge impact, or they want to have massive change, right? So those types of people, the mission is very important to them, right? The mission is more important than value, more important than freedom, more important than money. That's the first type of business owner. And the only reason I put that first is just to differentiate between the second type of business owner, which majority of the people fall into. Now, the first type of business owner, there are very few of them. The second type of business owner is that business owner who wants to have an impact on the customers that they serve, wants to have a huge impact on the customers that they serve, but they want to make money and they want to have the freedom when they make the money, right? So that's really important to them. So yes, of course, serving their customers to make sure that the customers' needs are met, but they want to have the income that they want with the freedom that they want. And majority of business owners fall into the second type of entrepreneur, the one that wants income, value, and freedom. So if you're the second type of entrepreneur, then this applies to you. This video applies to you. Now, it's true that business owners who want to change the world, who have the highest net worth, that's without a doubt, and sometimes also the highest incomes as well. That's not 100% true all the time, but they do have the highest net worth. They probably don't want to exit their business because the mission of the change and the impact is greater or is more important than freedom and lifestyle. So let's take a look at Elon Musk, Grant Cardone, and Alex Hormozi, right? So as of the time of making this video, just yesterday, in fact, Elon Musk became the first trillionaire in history, right? And that's just crazy to understand. I mean, like, I don't even understand really how much a trillion is. I mean, I know what it is in terms of the number, but what does it actually mean? It just means that he can have a huge impact. And we know about Elon Musk that his mission to make human civilization a multi-planetary race or species is more important than becoming a trillionaire. His mission to produce a car which doesn't rely on gas or petrochemicals and to have that type of car and to change the industry was more important than becoming a trillionaire. So the impact that he has is much more important. Grant Cardone, now, I have put this here that Grant Cardone does say that he wants to sell his businesses, and he has sold some businesses in the past, of course, especially after he got in contact with Brandon Dawson, his current business partner. But the mission for Grant Cardone, I mean, to be honest, I don't understand what his mission is. He doesn't really have a mission except for he's just obsessed with immense amount of wealth, I think it is, and income. But let's put that aside. He wants to list his real estate company, which is currently worth 5 billion or something, on the stock exchange, and that's all well and good. But he's never going to get off the hamster wheel, right? He's never going to truly stop unless he has to. And Alex Hormozi, of course, he sold businesses in the past, and if he says that selling his businesses was great for him in terms of income, like the money that he received, and it opened his eyes to what he's doing right now. But he wants to be the business, the leading business, the impact he wants to have. He wants to be the business that builds other businesses, right? So that is really important to him. So these types of people, the first type of entrepreneur, the mission is more important than freedom and lifestyle, right? Now their businesses are worth the most and they become the top 0.1% of all entrepreneurs. But when this video is not aimed at them, they don't care about freedom as much. But for you, if you're watching this video, then you value freedom more than an insanely high net worth. Now, of course, you do want a high net worth, and you do want a good, great income, of course, something which gets you into the top 1% and gives you the lifestyle that you want to live. But freedom is more important. And by the way, you can get to a really high net worth while working less than 30 hours a week. But it requires immense planning or mergers and acquisitions, so buying other businesses. And if you don't want to have huge amounts of planning, and you need to work really hard for at least 10 years, maybe five years to be able to build that. If you don't want to do that, and you just want to have a great valuation, let's say, for example, your goal is to sell your business for between 1 and 30 million, that is, I can tell you, more than possible to do that working less than 30 hours a week. So my business, which does multi-millions in revenue, a million in profit approximately, just a little bit less, I would say. There's less than a million in profit, but I work on average about 25 hours a week, right? So I've already said that. My week is very nice, very comfortable, yes? And if you want to do that, it's perfectly possible to have a business which is valued between 1 and 30 million working less than 30 hours a week. So what needs to be true for you to be able to have that kind of valuation? Now, of course, you want income as well, and we're going to talk about profit in the words of EBITDA. So EBITDA, you can swap EBITDA to operating profit. Slightly different, but let's say operating profit, not net profit, because valuations are based on EBITDA. So let's say you want to get to 30 million in EV, which EV stands for enterprise value of your business. So to get to 30 million in enterprise value, you're probably trading at between 6 and 8 multiple at that valuation. In this example, we're going to say you're trading at 8 times multiple. So that means your EBITDA needs to be 4 million in EBITDA. And depending on the ticket size of your product or service that you sell and the TAM, the total addressable market of your business, you're probably doing between 15 million and 40 million in revenue. And the reason why ticket size is important is because that normally has a direct effect on the amount of profit that you're making. And the total addressable market means at what scale you can do that at. So 15 to 40 million revenue business, there's not many businesses that get to that. We'll talk about how many businesses get to what. But you're trading at 8 times multiple in this example. It's perfectly possible. In fact, it's easier to get to working less than 30 hours a week when you have this type of business. Now, you can also do it if you have a 1 million in enterprise value business. So 1 million in enterprise value. So let's take a pause here. Only 5% of businesses ever get to a revenue of more than 1 million a year in revenue. Now, this is pounds, dollars, whatever, it doesn't matter. The principles apply the same whether you're in the UK or the US or Canada or South Africa. It doesn't matter where you are, anywhere in Europe. You need to be able to just follow the functions and follow the metrics. As long as you follow the functions and follow the metrics, you'll be able to get to over 1 million in revenue very easily. You can, in fact, if you're following the functions and the metrics, you can get to what is over here, 40 million in revenue. All you need to do is follow the functions and follow the metrics. As long as you do that, you'll be able to get there. So coming back here, if you want a 1 million enterprise value business, you can sell your business for 1 million. Then you need to have an EBITDA of 340 to 425. Now, why have I got the range here? The reason why I've got the range here is because a business which is about 1 million in enterprise value trades for anything from about 2.5 to 3x multiple. And it's quite difficult to trade higher than that unless certain things are true about the business. And we'll get to that in a minute. So on average, you're trading at between 2.5 and 3 times multiple. So that's why you need to have between 340 and 425 in EBITDA, which means that your business needs to be doing between 1.5 million and 3 million in revenue, depending on the profit margins that you have in your business. So like I said, even though 5% of businesses only pass a million in revenue, is because most business owners don't follow the functions and they don't follow the metrics. And even worse is that they have personal beliefs and issues that hold them back, mindset issues from ever achieving more than a million in revenue. So Sam Ovens, he says that business problems are just personal problems manifesting in the business. And I've known that to be true. So over the years, we've tried to promote people into leadership positions, and the ones that never made it too long in the leadership position is because they have too many limiting beliefs or mindset issues or personal problems which hold them back from holding those leadership positions. And what we've learned is that over time, or what I've learned personally, is that over time, those people who are able to rise above the personal problems, they are the ones who can maintain the leadership positions, and we keep them in those leadership positions, and then therefore the business grows as well, because they're able to rise it above any personal problems, follow the functions, follow the metrics, and then the business expands as a result. So everyone can do it. Now, coming to what we're saying here is that what is valuation? Valuation is, so here, EV is a game of multiple expansion. I'm going to say that again. EV, enterprise value, the value of a business, is a game of multiple expansion. If you're hitting the right EBITDA number, as long as you're hitting the right EBITDA number, that's what I should be saying, the tone, right? So as long as you're hitting the right EBITDA number, then EV is a game of multiple expansion. Now, what do I mean by as long as you're hitting the right EBITDA number? Is that to be able to really have an impact on multiple expansion, so making the multiple higher, you need to be around about $250,000 in profit or more, EBITDA, okay? If you're below $250,000 in EBITDA, it's really difficult to expand the multiple unless you're in tech or SaaS and you're in a particular area of the industry that you can justify that kind of multiple. I can't remember which business it is, but there was a tech business which scared a much bigger business into buying them for something like 20 times EBITDA. And the EBITDA was tiny. It was like 200 grand, right? So they were able to sell their business for, what is that, 20 multiplied by 20 grand, 200 grand. So they were able to sell their business for 4 million. In fact, it was much more than that. So I think the multiple must have been a lot higher than that. But they were able to scare this other business. But let's not get into that because that's an exceptional circumstance. For most of us, as long as we can get to above $250,000 in profit, let's say 340 grand. Let's take this example. Even a business with 340 grand in EBITDA can sell for 2 million if the multiple is 6x. So here, if your business is doing 340K in EBITDA and you do a 3 times multiple on 340K, so it's 333, but let's just say 340K, then the enterprise value is going to be 1 million. But if you're just able to double the multiple, so to go from 3x multiple to 6x multiple, the EBITDA stays the same, but because the multiple expands, that the enterprise value expands and you can sell for more money, right? That's why enterprise value is a game of multiple expansion more than EBITDA, as long as you're above $250,000 in EBITDA. Now, the higher the EBITDA is, the more you can play with the enterprise value. So it's really important if you can get your EBITDA to a higher number, 500,000, a million. When you get into 2 million, there's a lot you can do, but 2 million in EBITDA, there's a lot that you can do. But let's not get into that right now. So how do you expand the multiple of the business? If, for example, multiple expansion is the most important thing when you're talking about enterprise value and the valuation of a business, then how do you expand the multiple? The way that you expand the multiple, the first thing that you need to do is that you need to remove you and all other owners from the day-to-day running of the business. That is, without exception, one of the things that you need to do. You have to get out of the day-to-day running of the business. If you don't do that, then you're going to be trading at low multiple every single time. Now, of course, there's other things that you have to do as well, but this is the number one If your EBITDA is 350, if your EBITDA is 500,000, if your EBITDA is a million, if your EBITDA is 2 million, if your EBITDA is 5 million, and you're still in the day-to-day running of the business, you're going to be trading at a low multiple, right? So even if, for example, the average multiple of a 5 million business is 5x, which it is, that's the average. If you're 5 million, then 5x is the average. You will not be trading at 5x if you're involved in the day-to-day operations of the business. You'll be trading closer to between 3 and 4. So immediately you'll be losing 5 to 7.5 million to even 10 million in enterprise value because you're involved in the day-to-day running of the business at 5 million EBITDA, right? So that's why it's so important. I call this the operational exit to becoming either the CEO, the chairman, or a shareholder. And we'll explain that now in this video, because if you're the CEO, you're not generally in the day-to-day. If you're the chairman, you're definitely not in the day-to-day. If you're a shareholder, you're nowhere to be seen, basically, right? So one assumption is true. Now, it's easier to do this when you have a larger business as you have excess profits to do it. If you have excess profits, you're able to hire people to replace you. As simple as, right? So that's really important. Now, just to give you a caveat, I am still the CEO of my business, in which we do multi-millions. And the only reason is that I'm the CEO still is because we're still expanding, and expansion is extremely expensive. Growth is extremely expensive. And we're still in some of the payback period to our initial investors. But one thing is true, I'm completely out of the day-to-day. The key here is that you have to be able to invest in talent who shares your business's vision and mission to run the ops of your business. This is with regards to management, right? So you have to be able to invest in talent who shares your business's vision and mission, and they are the people who are going to run the ops of your business. That is true regardless what type of business you have. Even if you have a tech business, which is 100% technology based, to expand the multiple, because that's what we're talking about here, to expand the value of your business so you can sell it for a high price, you need to have that person, someone who understands and shares your business's vision, mission to run the ops of your business. So what are the minimum requirements to expand the EV, the enterprise value? A COO or ops manager. This can only be a human. This can't be a machine, not yet anyway, right? You need to have all operational positions in your business, meaning you need to be exited from them. So that can either be people or systems. There are many systems that you can use today, technology, or you can have people to exit all of the operational areas of your business. So you can do it without people. And of course, that means that profit is generally higher as long as the right systems are in place. But of course, the manager, the ops manager or the CEO is always going to be a person, a human, currently, before the age of AI robots or whatever. So that's one of the key things. The second thing, or one of the other things, is to build SLPs for all of your functions of your business. So make sure all functions of your business have SLPs, blueprints, and workflows in place, and training plans for all of your staff members. So any people that you have in your business who are essential to the running of the day-to-day operations of your business, you need to have training plans for them, and roles which are clearly laid out, specifications which are clearly laid out. The reason why I say training plans is because it's easy to develop a job specification or a role, but it's difficult to have a training plan to get to that job specification. So if you can build a training plan, then that enables that job specification to be fulfilled. And therefore, that has a positive impact on enterprise value, on multiple, very positive. This, by the way, I'm giving you some golden nuggets here, right? No business broker is ever going to tell you that. I mean, business brokers don't even tell you half this stuff, right? But even M&A advisors who work with business owners all the time, they don't tell you this stuff, right? So what you're getting here is absolute, it's going to bring your business valuation to a very high level. So the other thing is that you need to organize your business financials into a buyer-friendly formats. So your business financials, your P&L, your balance sheet, cash flow forecast, they're the three minimum things that you need to have into buyer-friendly formats. This video will get way too long if we go into what that means, but that's something that you need to do, right? So EV expansion, so the premise of all of this is that EV expansion, enterprise value expansion, the valuation of your business gets higher and higher because your business has predictable cash flows and your risk of the business is lower. So EV expansion is predictable cash flows and risk reduction. So buyers, investors will pay you more because you have predictable cash flows and the risk of that cash flow being hindered or something happening to that cash flow is reduced. And these are some of the minimum requirements to achieve that. So the first step of that is to do an operational exit. So how do you do the operational exit? The operational exit, which is you getting out there day to day, if you're in the day-to-day running of your business at the moment, is the first step is to get from whatever hours you're doing a week at the moment to get them below 30 hours a week. Now this is actually very easy. 3 questions that you ask yourself, the 3 questions that you need to ask yourself is that what tasks can you eliminate from your day-to-day? So what are you doing today as a business owner, as someone who's working in your business, who's someone is running the operations of the business, who's involved in marketing, sales, fulfillment, finance, customer service, all of those areas? What can you just stop doing completely? Like not only you, but also your business. What can you just stop doing completely and it won't have any impact on you or your business? That's the first question. The second question is, what can you do to automate something that you're doing today with technology? What can you do in your business that you can automate in your business with technology? Second question. And then the third question is, what tasks can you delegate from what you are currently doing? Now, the last one is, of course, what can you delegate from what you're doing? But the first 2 apply both in your role as whatever you're doing in your business at the moment, meaning your day-to-day, what you do day-to-day, but also from the business itself. So elimination and automation of what you are doing day-to-day will get you below 30 hours a week. Just stop doing some of the stuff that you're doing right now, which you think is important, but is actually not important, right? If it's not making your business more money, if it's not making your business more profit, and if you can stop doing it without having a negative impact on your team or your customers, and in fact, I would say customers less so than team, then just stop doing it. Just don't do it, right? You will get below 30 hours a week. What are you doing in your business? What are you doing in your day-to-day? Let's talk about your day-to-day. What are you doing in your day-to-day that you can hand over to technology? Nowadays, with agentic AI, there's a lot of things that you can do to, if not completely eliminate what you're doing, but reduce the time that it takes for you to do that same thing. So there was some exercise. I don't do this on a weekly basis, but I do this every time because we've got multiple locations in our business. So if a location drops below a certain level, then we audit that location, right? So the audit of that location used to take me between half a week and a week. Now with AI, it takes me half a day. From half a week to half a day because of AI. What can you do that you're currently doing in your day-to-day that you can use technology or AI to either completely eliminate, automate, or at least reduce the time it takes for you to do it? Just those things will get you below 30 hours a week. This is a promise. This is what I offer you. I offer you that I promise to you that you can eliminate and automate or use technology to reduce the time it takes of something that you're doing right now, and it has 0 impact on the revenue, and in fact, it's probably going to increase your profits, and you'll be able to get below 30 hours a week. It's very easy. I have systems in place which enables any business owner, regardless what business they're in, and especially if you're a service business owner, that can get you below 30 hours a week. Right, so now that you've gone below 30 hours a week, the next step is to get below 20 hours a week, right? So the next step is to go below 20 hours a week. So this is where delegation, the third question, what tasks can you delegate? The delegation will allow you to get to below 20 hours in a week. Delegation will allow you to get to below 20 hours a week. Now, it depends on your current team size and what your team is currently doing. How much are they utilized depends on how far below 20 hours a week you can go. So you can get to between 5 and 20 hours a week with delegation. So there's a step that I got this from Alex Hormozy, by the way. So props to him. Is that just write down everything that you do. So first eliminate and automate and reduce the time. Then you can write down what you do in a week, right? So you've already got to below 30 hours. So write down what you do in a week and which one of those things can be delegated. Now there's particular metrics and formulas that you can use to ensure that it's the right time to delegate and it's the right type of task to delegate and so on and so on. And we're not going to get into that video. I work with my clients and we go with this, all the time, right? Will you be able to get to 20 hours a week? Will you be able to get to 18 hours a week? Will you be able to get to 15 hours a week? Will you be able to get to 5 hours a week with delegation? Now, obviously, like I said earlier, is that, when you should be able to, if you've got excess profits, it's easier to do it. Why? Because if currently you don't have someone who you can delegate to get to 5 hours a week, you can just hire someone, pay for them. Yes, your profit will go down, but remember, this is about multiple expansion. Your multiple will definitely go up by hiring this person, right? So even though your profit will go down, your EBITDA will go down, your enterprise value multiple will expand by hiring this person. You have to make the right hire, of course. You will be able to get to below 5 hours a week. So 20 hours a week is achievable by any. Now, this is the truth. 20 hours a week, working week for you as a business owner in a service-based industry is achievable by any company doing more than £300,000 or dollars a year in revenue. It's not just about 1 million revenue companies, right? This is not just about 1 million revenue companies. If your business is doing more than 300,000, you will be able to get to below 20 hours a week. If you're below 300,000, I haven't seen yet a business which is a business owner who's able to go below 20 hours a week. They're probably sitting around about 25 to maybe 30 hours a week. So yes, it's even possible to get to 30 hours a week, but 20 hours a week or less, you have to be above 300,000. So operational exit will be achieved and will add at least a multiple to your enterprise value. So if you go below 20 hours in a week, generally you're completely out of the day-to-day operations of the business. And you have achieved what we say operational exit. This will add a multiple to your enterprise value. So what does that mean? So get your profit currently right now, right? And let's say, for example, your current value is at 700,000 with a 2x multiple because you got 350K in EBITDA. 2x equals 700,000. You will achieve 1 million in enterprise value by doing an operational exit, by eliminating things that you're doing right now, by automating some of the things that you're doing right now, and by delegating some of the things that you're doing right now. So you have now just become a millionaire, right? Operational exit achieved equals millionaire. If your current valuation is 20 million at 4x value, let's say you're doing 5 million EBITDA, then add another 5 million to your business's EBITDA, to your business valuation. 25 million in valuation. That's what you achieve. And by the way, when you're at 5 million EBITDA, if you do an operational exit, your multiple expansion is probably going to be 1.5. So even more, you're probably going to add 7.5 million to the enterprise value of your business. And that's a very good achievement. So that's the first layer, which is operational exit. The second layer is strategic exit, right? So I call this strategic exit in M&A basically means when selling to a strategic. But what I mean right now, when you're exiting the day-to-day, when you're exiting the roles in your business, what I mean is that you're moving out of the CEO role. Because what is the CEO role? The CEO role is someone who is guiding the strategy of your business. So you need to move out of the CEO role and move to the chairman role or the shareholder role. So what's a chairman versus a shareholder? A chairman provides strategic direction and advice to the CEO on day-to-day matters. So the chairman isn't in the day-to-day, but provides some guidance to the CEO with regards to day-to-day matters when the CEO wants that from the chairman themselves. Now, that's if it's more than a quarter. I've got here once a quarter or less. So generally speaking, the CEO and the chairman would meet up once a quarter or once half a year or even once a year. And the CEO would say, right, these are all of the things that we want to achieve from the business. And is that the direction or is this the way to get to that goal? And the chairman would validate or not validate that thinking and that business plan of the CEO. Or if the chairman is the only sole shareholder, then the chairman can give direction to the CEO that we want these profit numbers to be achieved. Because don't forget, the chairman here, you as the shareholder, the owner of the business, wants to achieve an income from the business. So if you need to achieve, for example, a income, I'm talking about profits that can be extracted from the business of £250,000 a year, £500,000 a year, 100,000 a year, whatever it may be, whatever that number is for you that you want to achieve from your business, then the profit needs to be adjusted accordingly because, of course, you've got after tax, corporation tax to be taken into consideration, how much can be extracted as dividends, and so on and so on. So the chairman is providing some guidance to the CEO with regards to the day-to-day. And that can be once a quarter or less, or once a quarter or even a little bit more as well on a monthly basis. I advise not to do it more than once a quarter. Maybe in the beginning when you've hired a new CEO and the CEO is trying to learn about what goals are important for you as a business owner, then you can do once a year, or once a month, I should say, for the first year. But after that, you need to drop off. As soon as you know that you can drop off to once a quarter or even less than that, once half a year, once a year, then you can do that. A shareholder, so the difference is that the shareholder does not provide any strategic day-to-day advice, but does have control with regards to decisions on stock holding. So for example, can the business be sold? Can new shares be issued? Can the shares be split up? So on and so on. These kinds of decisions the shareholder can make, but there is no involvement of the shareholder when it comes down to the day-to-day running of the business. They're just there to extract profits or to ensure that the business is growing, whatever the goal of the shareholder is. So moving to any one of these roles can easily add another 0.5 multiple to the EV, 0.5 to 1, I should say, 0.5 to 1 multiple to the EV of the business. So where you do an operational exit, that's definitely going to be adding a multiple. And depending on whether you're moving to a chairman, that's more 0.5. And if you're moving to a shareholder, you can definitely add 1 multiple. Now, what's common, what's not common? In private businesses, generally speaking, people are moving to chairman positions, less so shareholder. You'll only have minority positions or minority shareholders, which wouldn't provide any strategic guidance around the day-to-day of the business. So even in my business, I have a few minority shareholders, and those minority shareholders, they do have particular expertise that they do provide to the business, but those expertise only come about, in my particular case, when it comes down to acquisitions of other businesses. So each of these positions for private business, easily you'll be able to get to 2 hours a week or less. Because if you're a chairman position, so even if you're a chairman position or a shareholder position in a private business where you want to be extracting profits, all you're doing is you're checking revenue and profit targets are being met on a weekly or monthly basis. Normally on a monthly basis. If you're a chairman, you can go to weekly basis. But like I said, you're just checking the performance of revenue and profit and nothing else, because ultimately you still want to obviously get an income from your business. So let's take a look at this now. Take a step back. Number one, operational exit. You're out of the day-to-day and you're just a CEO with a ops manager or a COO. You will have an extra 2 to 3 days a week that you'll be able to get back with regards to how much you're working in or on the business. If you move to a chairman or a shareholder position, you ultimately have all of your time back because you're not doing anything in the business. You're just providing guidance as chairman, or you're not doing anything as a shareholder. Generally speaking, most people go chairman, but you have all of your time back. You won't really be doing anything when it comes down to the business itself, except for checking the performance of the revenue and profit for what you want to achieve as a business owner. So just think, if you are able to do an operational exit and you are able to get back 1, 2, or 3 days a week, if you get back 1 day a week from your business, what could you do with 52 days a year, an extra 52 days a year? If you get back 2 days a week from your business, what could you do with an extra 104 days a year? And if you get back 3 days a week from your business, then what can you do with an extra 156 days per year? You have choices. You can spend that time with friends and family, spend that time building a hobby, spend that time doing whatever else you want outside of the business, or you could refocus on only doing the highest value things to grow your business, from taking it to 5 million in revenue to 10 million in revenue, taking it from 1 million in revenue to 3 million in revenue, and so on and so on. Wherever you are in business, you can achieve this. Like I said earlier, I said you can do an operational exit, I mean, come out the day-to-day operations of the business and be the CEO if you're just doing 300K revenue per year, as low as 300K revenue per year. If you're already doing 1 million, 500,000, million, 5 million in revenue, you can easily do a very significant operational exit where you can get back easily 3 days a week, every week, and that's 156 days per year. What can you do to grow your business? What can you do to spend more time with your loved ones? And that's when your business becomes truly valuable. Because if you, let's say you move to a chairman position, you've got a business which is doing 5 million plus in revenue, you've had a CEO, you've put that person in the business to grow the business, you've told them the revenue and profit targets that you want the business to achieve. You expanded that multiple, right? Because multiple expansion is the goal for enterprise value, to expanding enterprise value. When you go to approach buyers to buy your business in that case, the buyers are going to be able to see that this business can continue to run without you. So let's say you just done an operational exit, you're still CEO of the business, right? You're doing 2 to 3 days a week, 4 days a week. Let's say you're even doing 4 days a week, no problem. Then the business core functions, marketing, sales conversion, product service delivery in this case, customer service, retention of customers, remarketing, all of that can continue to happen whether you're there or not. Yes, they'll need to install a CEO, but the core operations of the business have been laid out and you've done all of those things that need to be done to ensure that you can expand the multiple and really have an effect on that. Building training plans, financial documents are in order, and so on and so on, all of those other things that we mentioned earlier. Then there's risk reduction with regards to what happens to the core operation of the business. If you have moved out the CEO position, say your business is doing 10 million in revenue, 15 million in revenue, and you have installed a CEO where all you're doing is checking in on a monthly basis, a quarterly basis with the CEO, ultimately that business can be owned by anyone. The business can be owned by anyone, and therefore that's true value. Just like you can buy stock in Apple, in Google, now in SpaceX, in Tesla, in all of these companies, right? Amazon. You don't need to do anything and you're an owner of, when you buy one share of a publicly traded business, you become an owner of that business. Now, when you're buying one piece, obviously it's a very, very small percentage of that business. But ultimately, if you had the money, like for example, let's look at Berkshire Hathaway. Berkshire Hathaway, they acquire large businesses because that's their business model. So whether value investing is all about whether you acquire one share or whether you acquired the entire business, you're acting as if you acquired the entire business. And therefore, that's why it's valuable on the public market and they trade at high multiples. If you can do the same thing for your private business, an operational exit, a strategic exit, that anyone can own that business, strategic exit, so you become chairman or shareholder, that anyone can own that business, and that business will continue to produce profits for the shareholders that can be extracted, then that is a truly valuable business. And you can do that, whichever size of business you are, above 300,000 revenue, and you can do that. You can work 30 hours a week, you can work 20 hours a week, you can work 2 hours a week. And ultimately, when you're working 2 hours a week, you're not working 2 hours a week, you're just checking over results. So what can that do for your enterprise value, and what can that do for your life? And that's what you can achieve when you have the correct mindset, you have the correct plan in place, and it can be achieved for any business which is in the service industry or any industry for that matter. So if you want to find out more about how you can do this with your business, continue watching videos on the channel, but click the link in the description and we can have a confidential conversation about your business and how you can reduce your working hours, make your business more valuable, and ultimately design the business value for what you want, if you want to exit the business or if you want to continue owning it. I'll see you in the next video.